Well, hi everyone, and welcome to the Buffett and Beyond Saturday Market Recap Letter. And this is May 20th, 2023. And this letter is as of Friday afternoon, 2023, May 19th. And remember, folks, if you want to live on this beach like Jimmy Buffett, you've got to learn how to invest even better than Warren Buffett. And this week, wow, what a great week for the market as it is now sitting right on the top of its trading range. There are worries about the debt ceiling, a 40% chance of an interest rate increase in mid-June, and the regional banking sector is still not on solid footing. But next week is the week before a 3-day holiday, which usually spurs on an upward bias in the market. Now, our weekly stock analysis video, let's look at a stock that is both a defensive and a growth stock. BJ's Wholesale Club beat the market 4-1. That's 400% over the past 5 years. Now, that's a great stock. And last year, when the market was down 19.6%, this stock was up almost the same amount. So that's about a 40% difference just over last year alone. And our ETF video, well, the top 5 stocks in the semiconductor ETF are not slowing down, and they're up an average of 42% year to date. Now, NVIDIA almost reached its all-time previous high and is up 115% this year alone. And we have several other ETFs that are just beginning to show signs of life, like the oil ETF, like maybe the healthcare ETF, like maybe the energy ETF. Yeah, we're going to take a look at all of them. And here's the market, and this top red band and the bottom red band are volatility bands, and you see they're starting to widen, which is a good sign, especially if the market's going up. And it did, and on Thursday it closed just slightly above that line, and right now it's flirting with above and below that line as we speak. But remember, 3-day holiday coming up next week, and so the week leading into that 3-day holiday, usually a good week for the market. And down here you can see the blue line crossed over the red line, so we're just getting a buy signal in here. So we'll see what happens next week. Should be a good week and might confirm this signal right down here, which is our intermediate term indicator. And when we look at a candlestick chart of the S&P 500, we said that this divergence, this bullish divergence in the short term, is still in play when we played around right here in the middle. So this is a non-committal area right in here between this line and this line. So between the 70 line and the 30 line, that's a non-committal area. So we were still working off of this buy signal in here, and now we are overbought for a little bit, and we'll see what happens. And as I'm recording this just before the market closes, we're down a little bit. Maybe we're forming a little top in here, but remember, next week, 3-day holiday. And here we are above the 20-day moving average, the 50-day moving average, and the 200-day moving average. And down here you can see a little bit better this crossover, which is a buy signal, but we want to give it a day or two more to justify, or just to make sure that this is a good buy signal for us to take more positions. And we have one of the stocks in the semiconductor ETF that took a big hit last week, or the week before last, and all of a sudden this past week is coming to life and has a great buy signal in that ETF video this week. And looking at the QQQs, which is the NASDAQ 100 minus the financial sector, and you can see it's still riding that 20-day moving average up, and it's starting to take off. Will we get a reversion back to the mean again? Maybe. And we wouldn't mind seeing that happen, because that would be a buying situation as it comes down to here, because we're very bullish with the intermediate term indicator turning up very nicely. So this turned up several weeks ago, or about 2.5, 3 weeks ago, and that's a good call in there. So it justified this upward movement in this indicator. And of course, the QQQs is where the semiconductors and the tech stocks reside. So it's a very, very important index, and we'd love to see it go. It's doing very, very well in here. Now, portfolio protection, the May portfolio put just expired, and it was out of the money, which means that the market was above 410, actually sitting around 418 or so. We didn't buy the August 410 put yet, and we'll do that on Monday or Tuesday, because if we expect the market to go up further, the put will be cheaper. And so some of you don't like to have puts in your portfolio when the market is trending up, which is a good strategy. Some of you like to be protected all the time, and some of you like to trade these puts. And to make these puts a little bit less expensive, we can sell a put. So we're buying the 410 put, we might sell the 400 put or the 395 put, because we're starting to see a stronger market in here, and thus we can say, all right, we want maybe 150 points of the S&P 500 protected. We don't need any more than that. So there are various strategies that we talk about as we take on this put protection. So again, this is expired now, so we have two puts, which is protecting the portfolio about 2/3 of the way on a $135,000 portfolio or so. And we'll see if we're going to buy the August put either Monday or sometime during the week, for those of you who want to be fully protected all the time. So folks, we had a good week. Everything's going well for us. If you have NVIDIA in your portfolio, which we do in several of our portfolios, up 115% for the year so far, doing very, very well. And those top 5 stocks in the semiconductor ETF up 42%. So with the market up about 8% right now as we speak. So we're doing very, very well. So you go out, you have a good weekend, spend time with your family, spend time walking on the beach, walk on the golf course, walk on the sidewalk, stay home, watch television, whatever you want to do. Take your mind off the market, because guess what? It'll be here next week, and we're going into a 3-day weekend, which would be very, very nice for us. All right, folks, stay safe. We'll see you back here on Monday.